Okay, good afternoon. Welcome to New York session with myself. I hope everybody is doing well. It's a new week, and yeah, we go again. All right, give me a few seconds. Let me sort out some links over here to other members to come and join us. Okay, let's begin. I've shared the link, so let's begin. All right, so let's go over to the dollar index and then see what's happening. All right, so dollar index last week, we had a very wonderful move to the downside, um, which gave us some nice moves on the majors. So going forward, what should happen? Um, we have traded into discount relative to the range. We've traded into discount, and I wanted to see them take out this low here, this low, before any move to the upside will happen. So probably this week, that's what I'll be expecting. I wanted that to happen on Friday when this candle was printing. I would have loved to see them take out that low and then be rejected, because that's exactly where price should give us a potential, not reversal, but a move back up. Okay, so going forward, that is what I'm anticipating. Now it can happen exactly where we are because of the gap that I pointed out on the lower time frame, which is this one here. Because of this gap, right, the reversal can happen at that area where we are now, or they can come below it and then reject. If they do, then we have the fair value gap on the daily. So we have the fair value gap on the daily over here, this one, that needs to be closed in. So it's either we reverse exactly where we are, or they take out the low, hit this level, and then we start rejecting. So on the H4 time frame, it brings us to this down candle right here. And within that, let me take this out. Within that down candle, that's when we have a New York session fair value gap, right? And we've talked a lot about New York session fair value gaps. Very, very sensitive. So let me change the color of this here. Let's change this to red, and then make the bar a little bit bigger, and do the same thing for that one. Okay, so that's exactly where you want them to drop to in here, and then we will start seeing price going up. Okay, so and that's this level. And you can see that is exactly where price dropped to in November, and then price went crazy to the upside right here, but it didn't kind of touch the whole level. It went only to the 50%. So if they come back and attack that low, then we will see a potential move back up again. So that's why that's the actual level that we want them to come to. So this week we want to see them trade down in here and then reject and go up. Now, what day can that happen? If you look at the economic calendar, we have CPI on Wednesday. Okay, we do have CPI on Wednesday. So Wednesday can be a day that they can do that. Okay, Wednesday can be a day that this kind of price action that I'm anticipating can happen. Prior to that, they can stay in a consolidation, or maybe today they can send it down into that area and then reject. So patience is gold. Just wait. All right. On the daily, however, um, the reason why I said it can go into a consolidation is because Friday rejected Thursday's low. So by default, based on the fractal nature of price, we should be coming back for this high here, at least minimum, either this or that. Today we should be coming for this or that. So if they can come back below this low, then there's a more reason why it's potentially going to reject, because that will give us the high resistance low. Okay, that will give us a high resistance low, hence price can come below it and then immediately reject. So whatever happens, that's exactly what we are looking for going forward. It's either they go up from here or they're gonna drop and then reject. Now if you want to follow price, currently the H4 has closed below this last up candle, so the downside can be what they will do first. Okay, unless something comes in and then it takes price back above this down candle. But as it stands, because the last closing price is below the up candle, then the downside is what it's likely going to happen first. Okay, so that means the foreign currencies, which is euro, Aussie, pound, New Zealand, they are likely to go up first. Okay, so if you look at Aussie, Aussie is likely to go up, euro is likely to go up, pound is already up, um, and then New Zealand is already up. Okay, so those pairs can go up for the first 2-3 days, or depending how long they'll take to come down here. Okay, so if they take just 1 day, then the foreign currencies, as I mentioned, will be going up for 1 day, and then we expect them to reverse for the next 2 days. Okay, let's carry on. So with that said, let's see what's gonna happen within the next maybe by end of the New York session today. We will get more information. And again, today is the first day of the week, so we don't actually do much. Right, Mondays we don't do much. So let's see how this New York session is gonna book price in. Then going forward, we can decide what we're going to do with price. The foreign currencies, I'm sorry, the crosses, the Aussie CAD and the New Zealand CAD has caught my attention. I think I spoke about them long time ago that they were likely going to go up. Now, based on what I'm seeing, I like the New Zealand CAD still. So New Zealand CAD is likely going to go somewhere up here. So there's still room to the upside, right? And based on how we closed last week, which we closed above previous week high, this week is also likely going to go up, right? Now the range that we are trading within is here. We are trading within that range. So OTE 70.5, this up candle, that's where we are targeting, right? So dropping down to the daily time frame, you can start looking for buying opportunities to go up. I was going to buy here, but it went too deep into discount that I was not interested. It went to 88.8 or 0.88, which most of the time, if they do get there, price is likely going to take out low. So here, I wanted to see them take out the low and then reject and go up. And the confirmation they gave was not good either. I wanted them to close above this down candle. So I've missed all this move. And on Friday, that's when I wanted to get in. But again, I missed it. So I've missed all the move up. Now we are trading above this down candle. Hence, I'm going to start looking for any pullback to buy. So if we see, or if you see price coming back into this range, right? Especially now they've gone above these series of down candles. If you see price coming back inside the range, you're gonna use this low here and then whatever high, and you're gonna buy the pullback. Okay, so you're gonna use this low. Oops. This low to that high. If they start coming back down, then you're gonna buy with your stop loss below this, and then like I said, it's coming back above this high. Okay, it's coming back above that high, and then potentially that one. That's the draw on liquidity. That's where price is going for. Now, what makes me think like that? I think last week I did talk a little bit about when price forms a range, when price confirms a range, we can use these two here to know if price is going to do something or not, right? So if I was to go down to the H4 time frame, all I have to see is, are these, we call them quadrants, okay, whilst we're going up, is price printing down candles at exactly those levels. Okay, so if I zoom in, you see here price printed a down candle here. We can also see here price printed a down candle, and then right here price has printed a down candle, right? So that's a confirmation enough to tell you that price is likely going to do that, right? And where we've paused now is not actually random. Let me take this one out. Okay, where we've paused now is not random, because if you divide this into two, if you divide it into two, right, that's exactly where 50% is. So they might, on the 1 hour time frame, form a down candle here, right here, and then we will go to the next level. But I would prefer to see them pull back and form that down candle at this level. Okay, so if you see it coming back down, then you can start hunting for the buy to continue going higher. Okay, so New Zealand card and Australian card, that's what you can start looking for. Let me go to the weekly. Actually, let's go to the daily. With the Australian card, it can go all the way up to this level here. It can go all the way up to that level, because on the daily it's not showing anything in terms of gap. Now, when price is going up or down, the only reason why it's going in that direction, as I mentioned last time, is price is going for either a gap or is going for a high. Okay, I think last week I said it was previous highs and lows, so daily, weekly, monthly, quarterly highs and lows. That is the main target for price. But when is inside a range, when price is inside a range, so when price is inside something like this, when it's inside something like this, right, it's only going up in here for a gap. Something, a gap might exist up here, and then it's just going for that. Now, if you watch the video that I did recommended I think 2 weeks ago, as the guy was talking about how the algorithm is designed to go to specific areas in price, and those specific areas are quote unquote where price moved aggressively away from within a short period of time, which is essentially what a gap is. Because what a gap is basically when price skips or when price shoots away from a specific level. Okay, so on the daily, the last time price moved away from a level was here, right? This big move, the high and the low of this, that's where price skipped. So that's where price would want to come back to, and it's a very specific price level, right? So that's where we're expecting price to go, because that's the only level that is logical. Apart from that, the high, which is the quarterly high, is next. So it's either they are coming for this quarterly high or they are coming for the gap. That's it. It has no reason to go up. So if it's going up, it means it's designed to go to something. So what is it? It's going for a gap or it's going for a high. That's it. Okay, and here they took out a quarterly low. So a 3 month low was taken with the pattern that I spoke about last time, that when they are going to go in a certain level, they will print that pattern before moving, and you can see that here. So this is the 3 month low. That's the 3 month low, and then they run it here, and then they break structure, and then they pull back, and then they go up. Now, the reason why this time frame is a little bit tricky is the daily time frame, but this is the same thing. Ignore this, right? Ignore that, and then put daily. Sorry, not daily. This is already daily. um, Ignore that, and then put um, this whole area. Okay, it's a 3 months. All right, this whole area is a 3 months. So that's a 3 months high, and that's a 3 months low. Okay, so ignore this being a daily time frame, and then put this as a M15. Okay, this is an M15. So if this is M15, then this whole from this to that is 1 day. So just 1 day. Okay. Think this whole area from here to here is just one daily candle like this, because just as I'm saying this is 1 day, from here to here is the same thing, but it's a 3 months time frame. All right, let me show you what I mean. If I go to the 3 months, that's one candle. Okay, that's one candle. So that's a 3 months. That is October, November, December. That's what formed this candle, right? And it's just one candle. Now if you go back to a daily, you see what I mean. That is that. Okay, so the same idea, but think or just change the 3 months to 1 day. So just think that this is not 3 months, but this is the daily time frame. Okay, think that this is the daily time frame. So if this is the daily time frame, then this will be a M15, which is a 15-minute chart. So if this was a 15-minute chart, this will be my entry. This will be my entry. Okay, if this was a 15-minute chart, I'm buying the breaker, my stop loss goes here, my target is there, and then potentially that. Or I'll just look for 2 to 1 over here, and then I'll leave the rest to go for these two levels. Okay, that's how prices fractal. But this is a daily time frame. Now if you enter a trade in, because you're gonna get triggered in January 29th, okay, if you're buying this, you're gonna be triggered in January 29th, and you are going to sit in that trade throughout the month of February, and then now we are in March, right? So if you were to trade this from a higher time frame perspective, you have to have a lot of patience. You have to have a lot of patience to be able to sit on your hands, because in here, let's say you get triggered on the 29th of January, this would be 3rd of February, right? Throughout the month of February, you're going to be in a drawdown. You're going to be in a minus. And if you don't have patience, especially this down candle here, the one that formed on 13th of February, right? If you don't have enough patience that day, you're gonna actually close the trade because you feel it's not gonna work out. Okay, you feel that price is not gonna move in your favor, hence you might end up closing the trade and the price will move in your favor. So that's how fractal prices. But the same thing you can do on the 1 hour time frame. So for example, this candle here, let me remove all of that. This candle here, this one, if I draw the high and then I draw the low, okay, and then I drop down to the M15, actually let me go back, let me stay here and then draw the time it started so that starts at, that's the starting point of that candle, and that's the end of that candle. So that 1 day candle, that's the high and that's the low. So the same pattern that I just showed you on the 3 months is here. So you see we have this run down, taking out the low and then rejecting. So if I'm buying the same candles high with my stop loss here and then expecting them to come, so for example on the 3 months I said price is going to go to somewhere up here and then potentially the high, right? Now how long does this one, or how long did this one take to get there? The same pattern, nothing different, but this one took 1 day because this was Friday and this is Monday. So let's say 2 days to get here, and to get the same number of reward, right? To get the same number of reward. So from here to here, that you're going to get within, let's say 2 days. On the other one, it's going to take you, I don't know, because we have not got there yet. So that's roughly 2 months. If we keep going up and we get to that level this month, then it's going to take you 2 months. Whilst we can do the same thing on the lower time frame, and it's going to take you 2 days, right? But what is the difference between the one on the daily and the one on this time frame? The difference is that the one on the daily is high probability. Okay, the one on the daily is high probability. The reason again is because the big players in the market, that's the time frame that they trade on. They are not trading this lower time frame. They're actually trading on the higher time frame. So because they invest a lot of money in the market, you are mostly guaranteed that that high time frame is going to move in your favor. But the lower time frame might not move in your favor because the lower time frame depends on the higher time frame, or the lower time frame price movement is always going to line up with what the higher time frame is doing. So sometimes the lower time frame can move against what the higher time frame is doing, but yet still fulfill what the higher time frame is doing. So again, another example, maybe this is perfectly cherry picked, right? I cherry picked that one, but there might be scenarios. Let me go on the daily. Okay, let's say somewhere here. Here. This will be a perfect example. So the same thing, we have this low and we have this high, and then price took out this low. So let's go into that one. Okay, so that's the high and that's the low. That candle started. I'm teaching you something here, so bear with me. Okay, that's when the candle started, and that's when the candle ended. So the low and the high of the candle is here. Okay, and then the next day we run that low and then we reject. So the same pattern is here. So you're gonna be buying this candle's high with your stop loss, and you're gonna be aiming for higher prices, right? The fair value gap here and then this high. Now notice that this did not work out. Okay, this did not work out. Why is that? Why is that? It's because the lower time frame can do that. The lower time frame can go against what the higher time frame is doing, yet still fulfill what the higher time frame is doing. Okay, the lower time frame can go against the same pattern. I've not changed anything. The low is here, the high is there. We run it, we break. You wanna buy, but it fails. Okay, and the reason why it fails is because the higher time frame is the one that is moving higher, not the lower time frame. So the lower time frame can sometimes go down against the high time frame, but yet still fulfill the high time frame. Now, if you look at the day that this happened, right? If you were trading on the high time frame, you've now actually got an entry. So this is normal. Okay, this is normal price action that it can do that, but yet still go higher. But if you're doing it on the lower time frame, it will stop you out, but then you go back up again. So that's why I mostly, preach about the higher time frame. If you can look at the higher time frame and see a pattern forming, then you trade in line with what the higher time frame is doing, not focusing too much on what the lower time frame is actually doing. Because if you do that, most of the time you will get stopped out and then price will actually move in your favor. Okay, so I hope this little demonstration has given you some deeper understanding of how price actually works. Okay, so the same thing, this is the high, this is the low. They take out the low, they break, buy the breaker, and then price moves. Okay, so this pair and that pair is the same thing. So we run the low, we break, we buy the breaker, and price is going up, right? And if you can't be patient for such price action to happen, you will be profitable. If you can be patient for this sort of price action to happen, you'll be profitable. If you don't, and you trade outside these parameters, which is waiting for a high to be taken or a low to be taken, and then price giving you a confirmation, you will struggle. It's as simple as that. Okay, good. Let's carry on. So with the dollar index base, because of what price is doing, we will want to wait and see if dollar index will give us the rundown. So that means the majors, you have to sit on your hands and wait, but the crosses you don't have to. So with the crosses, because today is Monday, I would want to wait and see how today is going to trade, and then going into tomorrow, I'll give you something on the crosses. So Euro Aussie, I'm actually scalping it today. So Monday is always going to be a scalp. I'm looking for this to come and attack this low. That's all for today. Okay, so as a scalp, I'm looking for this down candle to reject, because we've broken the down candle here. So I'm expecting price to maybe trade somewhere down here. Okay, for a scalp. So Aussie, Euro Aussie scalping, at least even to take out landings low, right? Euro New Zealand, same thing. That one is also going to take out landings low and then trade somewhere down in here. Pound Aussie, same thing, looking for the landing low to be taken. Pound New Zealand, landing low to be taken. Okay, Apart from that, maybe we'll wait till tomorrow and then we'll see what euro pound is gonna give us, because last week we did close bullish. All right, and this week I'm expecting it to also be bullish. So Monday trading down first, that's a good thing. In here might be where they might form the low of the week. So if we trade down today, then tomorrow we want to see them trade down, taking out today's low and then rejecting. Then we will be aiming for somewhere up here. And notice how when price broke above this high, it went straight to a gap. That's all price is doing. It's always looking for these quick sudden move away from price, or it's taking out a high. So we're gonna look at these crosses going into tomorrow. Now let's go to gold. So with gold, we did close as an inside candle last week, which I'm not really a big fan of it. Okay, I'm not a big fan of. Okay, I'm not a big fan of price closing as an inside candle, especially whenever we have the change in the state of delivery, whenever price change direction. Now, what is the state? What is the change in the state of delivery? The change in the state of delivery is when price is closing in one direction. So for the last since 2025, the delivery has been always to the upside. We closed higher, we closed higher, we closed higher. So when I say closed, the closing price. This is the closing price. That's the closing price. Closing, 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 and then all of a sudden closing here. So the last closing was up there, and then we have a close here. So that is what we call a change in the state of delivery. Price has changed the delivery from up to now down. Okay. Whenever we do that, I don't want to see an inside candle. It's too early for them to print an inside candle. It can be very tricky trading this week. Why? Because what can happen is they can come back and take out this high and still come back down here, or it will just drop. Okay, so on the lower time frame, when you're trading, you need to be careful. So maybe what can happen for this week is the CPI can go down, or they can use the CPI to go up, take out this side, and then go down. Remember, the higher time frame narrative controls what's going to happen on the lower time frame, not the other way around. So when the week starts like this, you need to have some understanding of what the higher time frame is potentially going to do. Again, that is why understanding fractals comes in, because if a certain pattern is being printed on the higher time frame, it will fulfill that pattern. If a high is taken, a low is likely going to be taken. So if a high is taken on the higher time frame, a low is going to be taken. And if you're looking for a buy on the lower time frame, you're actually going against what the fractal is going to do on the higher time frame. Okay, so same thing here. If you're not aware of what I'm saying, that as an inside candle, price can go and take out the high and still be valid to go down, you might just be on this lower time frame expecting, because you will see a pattern here and you expect that pattern to play out. So for example, I'm expecting price to come back for this low, right? That's what I'm expecting. But it can come, especially this week, it can come here, and then all of a sudden, and you might think, oh man, this is going up. But all it's going to do is it's coming up here to take out the previous week high and then make its way back down. And you'll be in a long, you'll be in a short, and then it will go against you. You change, you buy, and then it will go against you. And then you feel like the market is against you. But if it does that to me, I'm not surprised. Okay, I'm not surprised if price does something like that. Why? Because I see it on the higher time frame. I see that that is something that can happen on the higher time frame here based on the weekly. So if, let's say for example, I'm short, which I am, from the breaker, this down candle, that's why I sold short here, right? I'm short. If price starts going lower, I'm in profit, right? But if it comes back up, let's say it does something like this. Of course, my stop will be at break even, so it's gonna stop me out at break even. But if it goes up here and then start rejecting, I'm gonna sell again. But you might not. You might not see that as a sell. All right. So that's why the high time frame, it's crucial. It's very, very crucial. Right. So the narrative for this week is we closed as an inside candle for the week. Hence, this high is subject to a potential run before we come for this low, or it can just go down. So just bear that in mind. So whatever is happening, any random unexpected news that comes in and then it takes price up, just have that high marked on your chart so that when they take it, you're gonna sell it short and come back down. Okay, so that's the play we are looking for on the gold market. Crude oil, I'm expecting them to go down. I'm expecting them to come back down and attack the low again, because like I said, that low was not taken properly. Let's see, I think we might probably even have a scalp going on. Yeah, I think we might have a scalp going on. Selling this down candle here. Right, if we come back to it, you can look to sell it. Put your stop above the high and then target this gap down here. Okay, this was what I was looking for on Friday. So Friday trade and then potentially today's trade. If we pull back to the down candle, you want to sell it and then target this. Okay, let's look at ES. So ES, on Friday we actually traded to that level, right? I think we pointed that they will trade to this level. They went for the equal lows again, the 3-month low, and then now based on how price traded, right? Remember I said that this is not a pattern. It's not showing a pattern that they're going to reverse at that low. Okay, it's not showing a pattern that they're going to reverse at this 3-month low. So they might keep going down actually to the previous 3 months range. So this low here to this high. So the next target will be 50%. It is roughly closing in the gap. Okay. So ES expect a continuation to the downside. Why? Because I don't think they have printed a potential buy. They have not printed a potential buy as price was approaching that candle's low. Okay, as price was approaching the previous candle's low, which is the 3-month low, it did not print a buy pattern. And if there is no buy pattern, then there's no buy. So we can actually look for continuation to the downside. Okay, so ES expect more downside. On the H4, any pullback, you wanna sell it. Let me see on the daily. Yeah, we have an up candle here. If today closes as a down candle, then tomorrow we are likely going to continue going down because we have an up candle that is gonna serve as a potential resistance. Because if you are going down, the up candles are going to help us protect, or it's gonna help protect price from going higher. So if we can close down today, then tomorrow you can look for a sell. But wait, let today close down. Or even if price pulls back on the H4, let's say for whatever reason, price pulls back up to this gap during the New York session, you can look to sell short and then expect price to continue going lower. All right. Okay, so that's that for ES. We got about 10 minutes. Let's go to cryptos. Okay, so starting with AI 16Z. Again, my bias on AI 16Z has not changed. It's the same thing. I think they came to the gap that I spoke about last week. Yeah. So even more cheaper again, right? Now, at what point would you say this is not going to go up? I don't think there is a point because where we are now, let me draw the flip. If you buy anywhere where we are or where we were before we go where we are now, if you're buying anywhere between here to here, okay, if you're buying anywhere in there, just chill. Unless this project is not quote unquote, whoever created it decides, I'm pulling the plug. Okay, unless they pull the plug. If you're buying from here to here, even where we are now is way cheaper than that. Okay, unless they're pulling the plug, that's when obviously you can't do anything about it. But based on where we are, the only thing that is for someone, because you can't do it. Your money is not enough. Now, the way you bought it, or the way if you bought AI, the same thing that someone that has lots of money is going to do, but the amount of money you use to buy is not enough to push the price higher. Okay, now there's no magic in the market. Okay, it's not just candlesticks moving, it's actually money. Don't see the candlesticks as candlesticks. See it as money. Money being poured in the market. Okay. So when you enter a trade, your trade actually prints on the chart, but your position is so small, it does not even blink. The market does not blink when we take a trade. But those that when they take a trade, the market blinks, those are the people we are waiting for. Okay. And it's just a matter of time. When they step in, you will know. And this move to the downside, this consecutive down candles moving to the downside, it's a sign. Okay, because that's how they buy. It's a sign that someone is buying. All right. So it's just a matter of time. And then it will start printing that big up candles. And that's the only thing, that's the only, I think, project that I think I've done a bit of research about. Okay, so unless they pull the plug, AI will be the only thing that, in my opinion, is worth looking into. Solana, I think we're not surprised they're coming back for that, because that's what it was meant to do anyway. So those of you that sold Solana when we were up here, I think Friday, this is Sunday, Saturday, Friday. So Friday, if we were here looking for this low as a target, and then that one. Bitcoin, same thing, looking for this low and somewhere down here as the target, right? So Bitcoin is not ready to go up yet. Now, let me see if I can pull back and then show you what I was talking about the other day. And drop down to the H4. And let's zoom in right in here. So this is an up candle. Where is it forming? At that level. This is an up candle. Where is it forming? At that level. This is an up candle. Where is it forming? Let me take this one out. Where is it forming? At that level. If we divide this and that into two, if we divide this and that into two, that's 50%. That's an up candle forming right there. Why is the up candle not forming here? Because I don't know, but it decides to form there. Okay, so we are likely to go here next, and then this and that divide into two, middle will be somewhere there, that will be next, and then here next. But that will be roughly where we'll be expecting them to reverse and go back up from. So here, that's 71, which is 70.5 area. And the reason why we reverse from here is because that's equilibrium. At 50% of every range, there's some form of a reaction. I say a pullback, there's some form of a reaction. So every range, even including the New Zealand CAD and then the Australian CAD, just make sure you are aware of where that 50% is. So if I was to pull this and that right here, there's going to be a reaction. Okay, maybe a pullback will happen or a down candle form there. Something, a reaction will happen there, right? So that's why here the drop and then the rejection. The next downside objective will be here. Okay. Ethereum, same thing. I think we've traded there, but this is the low, so that's where we're gonna go next. Right in here, 1915, that low. That's our draw on liquidity. We have pulled back, so that is a nice opportunity to sell it, to go down there. I think Ethereum is looking better for a sell. Between Bitcoin and Ethereum looks great, awesome. That's a change. We just had a change in the state of delivery, and it's a pullback, so look to sell it. Hype touched that level, 1414. Is it 1414? Let me see. Yeah, 1444 roughly, and they've actually closed the gap in, but I don't think it's done. Watch this candle's low, closing price. This down candle closing price. Now, where we are, we need something to come in here. Either where we are or this candle's low. We need something to come in. Yeah, something will come in. Just watch it. Either here or here. There might be a buyer. All right, a buyer might come in where we are, because that was an previous area of accumulation. Someone bought aggressively. That's what led price to shoot up like that. So where we are now, I think someone might come in for a potential buy again. Be careful selling hype. XRP. So XRP, the same narrative is either we go up here or we're gonna stay in a consolidation, right? Or maximum, or if they want to do damage, they will come back and take out this low and then reject and go back up. So XRP, I don't think we'll be dropping down. No. Okay, we might just come back, take out this low and then reject. I don't even want to see that, so you might stay in a consolidation. But the extreme case, extreme scenario is they will come and take out this low again and then reject. Now let me bring your attention back to why. So this is the 3-month high, right? If they were going to sell, the price action leading towards this candle's high or this 3-month high would have been different. This is not it. Okay, even if you check on the weekly, that is not it. If we were going to go down, this candle should have dropped like that. That's when this would be a run. So it'd be a weekly reversal, and then you can sell short that, put your stop loss, and then look for price to come down like this. Okay, but that wasn't the case. So we are again likely going to stay in a consolidation, or they will come back down and attack the low. Which one is likely going to happen based on how we closed last week, the week gone, which was yesterday? If it looks like they will come for this one and then reject, go up, or they'll take out this one and then that one and then reject and go up. So which side do you trade? Personally, based on how this chart is looking, I would say look at Ethereum. Okay, look at Ethereum, and then maybe Solana as well for a sell, and leave Ripple alone. Okay, look at Solana and Ethereum, and then leave Ripple alone. Tatuo. Okay, so what I wanted to see wasn't this. I wanted to see them go below that and then reject. The way this candle has closed, um, it puts Tatuo in trouble in terms of buying. Right? It puts it in trouble because we've managed to close below a high resistance low. Okay, a high resistance low, which again, it's possible because everything is possible. We're not supposed to do this. That means downside prevails. Downside is gonna it's gonna keep going down. Let me say it that way. So I don't know exactly where, unless maybe let me check on the H4. On the H4, we don't have any level in here. Let me check on the H1. Yeah, I can't go back. Okay, I can. Yeah, they've gone through that. They've gone through that. Hang on, let me see. Yeah. Right, this is the gap, right? They came in, and that's why we had that rejection. Now they've gone through that. So now I think based on what I'm seeing, Tatuo is in trouble. Unless we have some, again, big money come in, um, it can go in a consolidation. That's it. Because I don't think it's gonna keep going to zero. So it can go into a consolidation, and then obviously big players have to come in, which it can be a sign because you have this up candle here, and then the down, 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 taking out this February low. So it can be a sign that big money is stepping in, right? So just wait for, at this stage, wait for big money to break this high. Okay, initially was that one, but it couldn't. Now they've printed another one. Let me see on the RSI. The RSI is low, but it's not oversold yet. So maybe sit and wait for now. If you're going to buy, sit and wait, let them break this. I don't recommend selling. If you sell here, you're just gonna give your position to smart money. So I don't recommend selling. Okay, because if you sell whilst prices at this level, you might as well as just give your money to a charity, because you'll be giving your money to someone that wants to buy it. Right? So the only thing is buy. But if you buy, just sit on it and then wait. When it start appreciating, then you can enjoy. If you're not in, then wait, let them break this high, and then you look for the buy. And lastly, Tatsuki came to touch. It couldn't close below. I was watching it when it was trading at that level. It couldn't close below, so that's a good sign, but not great, because we don't actually usually want them to come and trade the candle low, middle, and then the high. We don't want that. Okay, so personally, I think this low is in trouble. I think that low is in trouble. We might be going for that because the daily is printed gap here, which is being sustained. So initially we had a gap there, but now the daily has printed one here. So they might sustain that and then take price lower. And I think that's what I would go for. If I was trading it, I would look for this low to be taken. As long as this gap stays open, okay, they will go for that. All right. Okay, I think I have overstayed my time a little bit for today, but that's fine because it's Monday. Mondays, you always want to look at all possibilities that can happen for the week. And then going into Tuesday, Wednesday, it will reduce because we will know what price wants to do. So I'll end here. Enjoy the rest of your day. I will see you tomorrow, same time. Take care.